it. So thank you so much, Morgan, for joining us. I really appreciate you taking time to talk to our founders and our community as we do this monthly founder hour. And
of course, thank you for having me.
No, thank you. So I'd like you to tell us a little bit about yourself, how you got into angel investment, and then we can start a few questions and get this kicked off.
Sure thing. Hi everybody. I'm Morgan Johnson, originally from the UK, but been living now in the US, in New York City for 10 years. I actually started angel investing whilst I was still in London and whilst I was still working in finance. I'd love to regale you with some master plan that it all began with, but honestly, it was about 2010, 2011. Myself and two of my best friends, both of whom were in finance, we're having a beer an evening and sort of agreed that we didn't have much spare time, but we had a bit of spare cash, and we thought there were some interesting things going on in the private markets, and thought if we put our heads together and our spare cash together, we might be more effective as a threesome than we would individually. And that was the beginning of what is now, I guess, a 13 year journey. We've always invested under the moniker of Nucleus, but it's essentially, it's the three of us at the core of it. And over the years, we built out a network of angel investors, high net worth family offices that we invest alongside, we lead syndicates with, and that we, in certain cases now I'll do work for the family offices as well in terms of research and diligence and the like. But sort of stumbled into it while still in finance, and then left finance to sort of focus partly on angel investing and partly on some entrepreneurial ideas that I had along the way.
Well, thank you. Thank you so much for sharing that. I do want to say to our audience, if you have any questions, please, this is supposed to be a dialogue and a conversation, you don't have to wait for us to take any pause. So if there's a question that comes along the way, please you can put it on the chat and I will be making sure that I address those questions. So Morgan, let's get started, because I know you and I talk about a lot of what we're about to talk to today. And I'm always interested in getting your thoughts after so many years doing this. And I want to kick it off with possibly one of my favorite questions, like, what do you look for in a deck when you're presented with an opportunity?
I think so. It's a very broad question, and I think it almost needs to be preceded by the question of where has the deck come from, because as you start to delve deeper into this startup world and angel investing world, people find you on LinkedIn and you can receive cold emails with decks on. You'll go to events and people will take cards off you or connect with you on LinkedIn and send you things, or founders that will introduce you to other founders. And so even before I've opened the deck, I'm kind of I have a sort of filter on and sort of thinking about where this deck has come from, and whether it's sort of a quasi warm introduction or a qualified introduction, or if it's a cold email, what's accompanying it with the communication? Is it something catchy and cogent, or is it pretty loose and looks like it's just been blanket sent to an email list that somebody's gone hold of? And so that sort of prefaces any sort of evaluation I do for before I actually open the deck. And then if I get to the point where I think, right, I'm going to open this and take a look at it, I think the high level stuff for me is I immediately take a note of how many slides there are. If it's more than about 10 or 12 slides, I'm immediately recoiling, because it's sort of the signaling to me there is that this is a founding team or a founder who isn't able to distill down their core message into a brief marketing document. I'm always looking at element of design and how concise they can be in their wording, because I think a lot of these signals feed through into how a founder approaches not just fundraising but selling and I guess to some extent hiring as well. And so at the top level, I'm sort of looking at it. Have they got a concise message? Is it designed well? And am I able to very quickly understand what problem they think they've identified and how they think they're going to address it? And I know some of your questions dig deeper into this, so I don't want to jump ahead of us, but that's at a very high level.
Yeah, actually, one of the last questions that I have, maybe I actually will push it up, was because you just mentioned cold outreach. And so I'm just curious to know, should founders do a cold outreach? Should they not? If they do, what are your thoughts behind that? Because you did mention it, so I thought maybe I should just bring it up since you're talking about it.
I'm not going to give you a definitive answer either way, in part because, I spend a lot of time in the space listening to podcasts with VCs, talking to other VCs, and, I'm aware of certain, angel investors and VCs who, in order to make sure that they're giving a fair shout to the data, not to the underlying founders, they'll say, well, for this month, I'm only going to respond to cold outreach. And what they're trying to do is not sort of exclude one particular bucket of potential information just because there hasn't been an introduction. But what I would say that is, I think it's most common is you'll hear time and again as you spend more time in this environment that getting some form of introduction or warm connection really, really helps to sort of smooth the pathway to having somebody spend the time, maybe give you some feedback on it, and then hopefully get towards a meeting.
No, thank you. We do have a question, and I believe Irene.
Yes. Hi. Yeah, I apologize if I put my camera on. Like, the internet is like kind of weak in my area, so I'm gonna talk without a camera. So
No problem.
You mentioned decks getting to you, and obviously there's a big difference between a deck when someone's presenting, where they might just have an image and a few words and tell the story, versus a deck that's being sent out that has to have all the information in it. So is the era of one-pagers over? Like, do you prefer a deck that's overloaded with a lot of info to understand where they're going, or would you prefer a one-pager? Could you talk a little bit about that?
Yeah, sure. And I think it's a fantastic question because it sort of drives at the heart of what the process is. And I think the answer to your question is yes to all of those things. And I think the different documents can be used at different stages of the process, and particularly with cold outreach or lukewarm outreach, having a one page or a sort of almost teaser deck it can be really powerful. Because what you're trying to do oftentimes when you're being connected with somebody is get enough of that attention to them want to take a meeting with you. And the deck that you would potentially use in a meeting or a presenting meeting would be very different than the one you would send to somebody you haven't yet spoken to or that you've been connected to. And so I think it's useful to have multiple iterations of your pitch deck. Capturing at the highest level what you're doing, where the value proposition is, expanding out onto it, and then as you get further down the line with the potential investor, being able to share even more information with them. But I do like the idea of a one page or a 3 or 4 slide teaser deck.
Cool. Thanks a lot.
Of course.
Any other questions from the audience? No. Okay, great. So I will keep going. So as we're talking about,
sorry, can I just weigh in real quick on that? I think when people only have the teaser though and not a deck, it also says something about, I think, preparation for maybe not being ready, not knowing what the market needs. So I do think the deck is something, unfortunately, you have to have. It's great if you have the teaser, but yeah, that's not a standalone today, and that's not enough.
Yeah, I completely agree. And I probably should have been clearer that I think as you go through this process of creating it, you start with a deck that is probably 30 pages long, 30 slides long, and then you're trying to distill it down into different versions of the same story. Ultimately where you get to a point where you can pitch it in two or three sentences if needs be. But I agree completely that you need.
And listen, some of the slides may go into the appendix, and they don't even present it, and it's something that investors can look at.
Yeah, agreed.
So with that said, what would you say are some of the non-negotiable elements or information that a deck should have, no matter what stage of fundraising you are in?
Okay, yeah. So I think at the top of it, and I know some of this stuff is fairly well sort of peddled, but I mean, you need to very clearly identify the problem that you think you've found, and then closely tied to that, how are you then addressing that problem? You need to acknowledge that more often than not, whichever problem or market you're going into, there are probably competitors of some sort. And I'm not a huge fan any longer of the slides where you see a grid and you've got all the competitors and there's ticks next to your name and X's next to various competitors in different attributes of the product. I think it's more powerful at this point to be just very clear on how you are different from your competitors and why your particular product is going to reach your particular niche of the market most effectively. And I think tied to that, or leading out of that, having a clear description, illustration of how you're going to reach your core consumer, your core customer, and how you're going to speak to them and how you're ultimately going to convert them to be a customer is essential to have in your story. And I also think another non-negotiable for me is at least a depiction of what your unit economics of your product are going to be. How much is it going to cost you to make or source, and then how much are you going to be able to sell it on? And if you're pre-revenue, doing that in a way that you illustrating you've done some research on how you're going to get your raw materials or build your tech platform or whatever it might be. And even if you've only got small amounts of revenue, being able to illustrate it in real time, I think is very powerful.
Yeah, I completely agree. I guess with that in mind, what is something that you feel is that if you see it on a deck or not see it, it sort of already makes you not want to continue exploring that opportunity? Because I know for myself, when I look at decks and some stuff you and I have discussed, right away we're like, yeah, that's a no go from there. And I guess if you wanted to share from your experience, and even now, has it varied a little bit based on what's going on?
I wouldn't say it's varied so much with respect to the environment too much. I think the turnoffs tend to be tied into a mixture of the non-negotiables and how they've been addressed. Like oftentimes, if I think about some of the stuff we've looked at in the last few months, where the problem and the solution is really convoluted, and the founders haven't been able to distill down what they're working on and how they're solving it in a clear, concise way. That to me is always a little bit of a warning signal. It's not necessarily I don't want to look at this anymore, but it's making me have to work to understand what's going on and what they're trying to do, which in turn tells me that they haven't necessarily done the work themselves to really stress whether this works. Another aspect of things that I think that I was actually reflecting on this morning again is something I'm always wary of is if founders are quick to point out celebrity investors or potential big partnerships that are just about to be signed. We're in late stage negotiations with Nike for this, or and that's not to say that those things can't come to fruition, but I do think, particularly on the celebrity side of things as well, is that some founders and some companies will lean heavily on the fact that this person's investing, or they're connected to this person, they're talking about a partnership with that person. And in 13 years of doing this, I haven't seen many of those be super effective, or the signal to noise ratio is very low on that stuff. And how I think about it in two different buckets is with the sort of higher profile investors. There was a period, to give you an example, there was a period in 21, 22, where I saw a ton of decks where Mark Andreessen, the founder of Andreessen Horowitz, one of the sort of highest profile and very successful venture capitalists in Silicon Valley, was an angel investor. And I would see that on so many decks. And then you try to push the founder or the founding team to tell you, okay, well, how much is Mark, investing? Is he going to be involved a lot? And you'd find out invariably if they'd even tell you, but invariably it'd be a check of $25,000 or $50,000, which for most angels is a lot of money, but for Mark Andreessen is worth $4 or $5 billion. It's for him, that's market research. He can be involved in 200 startups just to know what's going on in the market and probably write it off from a tax perspective. But not to get into the tax side of it, it's just, I think when founding teams try and highlight these kind of glitzy, glamorous, shining star stuff, to their story, as opposed to the nitty gritty of this is the product we're building to solve this real problem. And we found this because we know this from what we've been doing before or the customers that we've spoken to. That's like real meat on the bone of an idea there versus hey, we've got this cool thing and we think we're going to be able to sell it to these and we've got Drake who's going to invest. And I just think that a lot of people, and I'm seeing less of it now because I think there's more rigor in the market, but I do think there's still a lot of that where, this late stage negotiation with XYZ big company or ABC high profile is an investor. It just doesn't carry much weight after many years of being sucked into this stuff and losing money on this stuff, honestly. In my first 5-6 years of doing it, I've lost so much money that way. Instead of like digging into, okay, how are you going to find your customer? How are you going to speak to them? How are you going to keep your customer? Not focusing on those, like, the mundane operational aspects of business, which is what so much of this stuff boils down to ultimately.
I guess with that, even in mind, my other question I would say to you, and I think you and I have also talked about this when we look at DEX, is that how important is it for a founder to, and obviously I sort of know this answer, but I just want to, from your perspective, how important is it for a founder to really understand what you're investing in? Because a lot of times you might get a deck and the deck might be great. The product might be great, but maybe that's just not your sweet spot. And I know this is something you and I talk about because not even just recently, you and I have had sort of that conversation because we were faced with that.
Yeah, absolutely. And I think a lot of this comes down to how you're connected with the person that you're pitching, truthfully. Oftentimes, if you and I are talking about investing, I'll tell you about the things that I won't look at. I won't look at biotech, medical stuff, just because I don't think I have any edge there. And I don't think I have any sort of way to truly understand something better than, somebody with an expertise in those areas. I think as a founder, you hopefully, if you get to the point where you're actually on a pitch meeting, you have sent some form of information that will have allowed that investor or that angel to have said, hey, this isn't for me because I don't look at this particular sector or these type of businesses or not. But you definitely want to, if you haven't been able to confirm that completely, I think it's a good idea to confirm that early on so you don't waste your time or their time, right? Because, when you're raising, fundraising is hard, as I'm sure everybody is aware of it in some way, shape or form. And you have to take so many meetings. You have to fill the top of the funnel so full in order to get to, meetings that convert into checks that then convert into money in the bank. And so you want to be mindful of everybody's time, both your time and the person you're trying to get invest. And if you're doing a material science company, a material science startup focused on, a specific piece of engineering that's come out of a science school, and the person you're pitching hasn't been told that yet, you want to get out there quickly. Just want to check this is, you'll look at this kind of thing. And it applies to the stage as well. Oftentimes people will get connected to me and be like, oh yeah, we're raising for our Series B. And I said, well, I don't really look at that stuff because I don't write checks that are big enough for that. And so, you want to be mindful of everybody's time. You want to make sure that what you're looking to talk about is right for the person you're talking to.
So with that said, would you say, especially with angels, because VCs, you can find what they're investing in and size checks. So with an angel, you would recommend that the founder ask those questions ahead. If they got the introduction, let's say, and the person who introduced them didn't know what you're investing in, you say it's okay for the founders to be asking those type of questions before the pitch.
Yeah, I think I would prefer to see it happen over email as you're setting it up. It's like, really appreciate you taking the time to meet with me. We're a pre-seed biotech startup, in the ESG space. Is this something, you'd be interested in or interested in hearing more about and or have considered investing in? You don't even get to the core point of that, I would say.
Okay, no, I think that's great. That's great advice. And I guess the next part, as we move on to this other sections about pitching that I wanted to touch on, is how much would you emphasize or really recommend founders to invest on a deck designer, on a pitch coach, on a financial model? They're big expenses. That definitely, it's almost like the beginning of the investment. How much would you say I definitely think you should do it, or yeah, what's your thoughts on that?
Breaking them down one by one, I think some form of design is key, because I think at this point, a lot of this stuff is very accessible, and even, you know, and I'm even seeing stuff now, as I'm sure everybody else is. There's various AI design sites popping up that you can put your content on, and they'll generate slides for free or a very minimal cost. But even without those, being able to go on something like Upwork and find somebody to just, even at a basic level, spruce up your slides, if that's not how you know, and I'm terrible at, you know this, I'm terrible at decks, but you can get stuff done for very reasonable prices in the whole scale of it. And I think if you think about the process of getting to a conversation over Zoom or in person with an investor, you know, if that person is looking at 10, 50, 100, however many decks a week, if you've got really, really poor design, it's going to be hard for you to stand out. It's going to be hard for you to be memorable. And whilst the design doesn't trump your idea or the problem you're solving and how you're going to execute and reach that market, you don't want something, you know, a small step to help you fall over at the first hurdle, I think. And so I think design is something everybody should do in some way, shape, or form. It doesn't have to be tens of thousands of dollars. It can be, but I don't think it needs to be. But I do think you if you can't figure it out yourself, which I can't, finding somebody that will do it for you for $500, $1,000, $2,000, I think is really useful, and it's money well spent. The next one was pitch coach. I think it depends. I think it depends on who, you know, what your background is, what you feel comfortable in doing. You know, if there's more than one founder, whether one of you is better at selling than the other one. What I think you have to remember as a founder or the founding team is that whatever business you're in, you're going to be selling something, right? And so one of the things the investor's trying to understand is there somebody on the team that can sell this? Like, this might be the greatest thing in the world, but very few products truly sell themselves. Like, there still needs to be like that initial sales process to somebody. And so you need somebody on the team that has some semblance of being able to sell. If nobody from the team comes from that kind of background, it isn't super confident, before you spend any money on a pitch coach, I would suggest like pitching each other, pitching friends, pitching relatives, you know, pitching, you know, colleagues that you're willing to share the idea with if you're still working before you've started it, and trying to get comfortable on that kind of thing. You know, yes, is there value to working with somebody that can coach you to pitch? Yeah, maybe. You know, and I do it for some people, but I'm certainly not going to recommend it as a first port of call. I think you can get a lot of comfort by pitching people you know and asking them for constructive feedback. In terms of financial model, I think my answer to that varies a little depending on the stage you're at. You know, I look at stuff from essentially idea on a piece of paper through to about Series A. Most of the stuff I look at is idea on a piece of paper to seed. When I ask for a financial model, if I'm that interested, or back up, when the deck comes through, I'm not expecting detailed financials to come through with that either. I'm expecting, you know, a unit economics page and maybe some very high level projections, which invariably are going to go like that up and to the right. If an idea is interesting enough for me to want to dig a bit deeper, take the call. I'll ask some more financial questions. And then if it's interesting enough that I want to consider it a little bit more, then I'll ask for a financial model. But when I get through that financial model, I'm not looking for it to be, you know, SEC registered level kind of accounting, GAAP accounting. I'm generally at that early stage just looking to see, has the founding team or the founder given some thought to what this business looks like as it grows and where the costs might be. And so I'll pull that model up, and I'm not going through cell by cell to make sure it all adds up or anything. I'm just kind of looking, well, where are the big cost centers, and you know, does that seem to be growing as I might expect it, as the top line might be growing, or as the sales team is growing, and the like. And I'm just trying. It's almost like a sort of a sense check. Like, you know, they're giving this some thought. Does it feel like they can you know, understand how the numbers are going to evolve? Because the reality of it is a little bit like design. The finance function at this point is somewhat commoditized, and you can find outsourced CFOs or services, or you go hire an MBA to help you out with this stuff. And so again, I wouldn't implore people to invest a ton of money in it, but if it's something that's completely out of the realm of their knowledge, then yeah, spending a bit of money to get something basic put together. But I think it's far more important understanding what your core market is, understanding what your unit economics are going to be, and understanding how you're going to reach that first sort of niche part of the market.
I think those are great. And I'm just curious, anybody in the audience have any questions about any of those topics or anything we've asked so far? No? Okay, I want to make sure I give you guys space to also ask questions. And so into that, then I jump into the actual pitch, the art of pitching, because to me, it's an art. I think you can have a great product, a great deck, but if you can't pitch it, like you said, it's a sales piece. If you can't pitch it, then you almost are like starting from scratch again. So I'm wondering, what are some of those things that you think make a great pitch?
I think you've hit the nail on the head when you said it's like a story, and you're trying to tell a story. And you've heard me say this before. When I coach people on the pitching side of things, I always like to frame it as that you're selling a ticket to the future. You're inviting that investor to come along on a ride where you're going to build something that's solving a problem, and that in the future it's going to be a lot bigger and a lot more valuable. And so when you pitch somebody, I always like the idea of trying to paint this future self of what the company can be. This is the problem we've identified. This is how we're going to solve it. And then once we get this right, we're going to scale it this way, and it's going to be this big thing in the future. But right now, it's just this idea, and we're the people to do it for you. And you, by investing, you get to take a ticket to be on the journey with us. And so I think to then distill that down into what does that mean? Obviously, understanding what the problem is you're solving. Obviously, being able to describe in an enthusiastic, convicted way that you have a way to solve it, and that you are the people to be able to solve it, to be able to execute on this. Being able to demonstrate an understanding of the potential for what you're doing, but also being able to bridge back to how you're initially going to get into that and make that first foothold within the market. It's you often get these slides. This is a side of our market. It's a $10 billion market. That's all great, but how are you going to get that first sort of toehold in there to build off of that? And I think sometimes people will often overlook that, and so making sure you include that. I think talking about the potential risks is powerful too, because it makes what you're trying to demonstrate to an investor is that you aren't just thinking about how wonderful this one will be. You're also talking about the things that could derail you and how you're going to guard against those risks. And I think being one of the tougher things, I think, to describe about pitching, but I was thinking about this a little bit this morning, is that when I speak to founders, I'll often try to challenge them a little bit on some of their predictions in terms of, well, by the end of this year, this is where we're going to be, and this is how big it's going to be. And I'll ask a question along the lines of, okay, well, you've said you're going to reach this milestone by November of this year. What happens if you don't reach that? Like, what are the things that could stop you doing that? And I'm not so much looking for the exact responses they give in terms of whether I think they're right or wrong with what the potential risks are going to be, or how they may not hit it. I'm looking for more how they think about it and how they respond to that sort of pushback on what they're doing. Because one of the big things that I always say to founders or people in employed by bigger companies but thinking about starting something is it's such a difficult journey to be a founder. It is long and hard, and you spend so much time with so many people telling you no over and over and over and over again. And you've got to have the resilience to keep picking yourself up and pushing on and taking 1,000 no's and just smiling and dialing again to try and get what you need, whether it's more money or more customers or more employees or whatever. And it's that resilience and that persistence and that versatility of character that are the most important things to try and get across, particularly at the early stage, I think. And so being able to get your pitching to a place where you feel comfortable to answer questions that may challenge you is really important.
And so we have a question from Sabrine.
Hello, do you hear me?
Hi. Yeah, loud and clear. Hi there.
Thank you. So my question actually, from an investor perspective, last year you had more revenue than this year, because last year we invested in marketing in a period of time, and then we noticed that our revenues were growing like exponentially, and then we stopped because we lacked actually funding, because we didn't raise money yet. Everything was done organically, so we're making revenue actually, but not that much, because we started like with $500. So how to explain this drop to an investor? It is a red flag for them, like. So yeah, this is my question.
I mean, without knowing a ton else about the business other than that context, I mean, I think, you know, what you would be useful to highlight there is that up until now you're self-funded. You know, it's easier for me to think about the kind of questions what I would ask as to how you got to this point. You know, I would ask, well, how did you not foresee that you needed the funds sooner? Because if you're forecasting the right way, you're going to see that you're going to run out of money to keep acquiring customers, right? And so maybe your answer to that then evolves into, well, this is why we're here, we're needing funding. Another question I would probably ask is that if you were growing customers, can I assume that they weren't profitable customers? Because if you've run out of funds, then
actually we were profitable last year. We were profitable, but we noted that when we invested in marketing, we got a grant actually, and we invested all the grant in marketing and communication, and we've seen like our growth was 300%. We had the 300% growth. We invested a lot in ads and influential marketing, and then when we stopped, the sales like dropped like drastically. And now we found it really difficult because we're closing our first round, but the question keep coming up, like why? And for some investor, for example, that we approached, they told us that is a red flag.
What was the I didn't catch the last thing.
They told us it's a red flag.
Right. I mean, I think it's fair to say if I were to see something in revenues dropping this year versus last year, I'd be like, oh, why is that? Do you want to jump in, Natalie?
Oh yeah, I was just going to share a little bit. You know, I know some investors that just don't invest in consumer, frankly, because of that trend where it's, you know, you can really fuel, you know, what sales look like because of marketing spend. And so I think understanding the story and being able to speak to it, you know, to Morgan's point, if the unit economics weren't there, you know, why invest in it? But you also can invest to make things look rosy, but then if you pull back because it's a tougher environment, that's going to be reflected in the numbers. And so I think just having that open dialogue and being direct and understanding what's happening and why you're going on that journey is really important. I mean, I'll give you an analogy, which is some businesses will go through a process of they'll have a perpetual license and then they turn to SaaS and they have these weird flat or, you know, down years. And as long as you can tell the story and know why and where you're investing, and as long as you can, you know, relay that and be logical and of course not make anything up, but tell what's happening with the numbers. I think investors that are intelligent and that are going to support you can get behind that, but it's tough because some investors really don't want to invest if it's flat or down. But again, it's story. It's do you understand and do you have a handle on it? So I hope that's helpful.
I think taking inspiration from what you just said there, Natalie, one question I'd ask, or one suggestion I might have is like, can you look at the sales that were generated by all that marketing spend? And are there segments of those sales, customer segments from there that are more profitable or potentially more successful, and that you can essentially craft a story that we decided to dial back whilst we did the analysis on what we spent to identify more accurately the best niches within the marketplaces to be targeting, and then now we're going back out with a view to only be spending in those sections. Does that make sense?
Yeah. Did you learn?
Yes. Actually, from that time we've pivoted. Like we're starting. We have created another thing, like a more B2B solution. that can we pivoted like completely, and now we're still like pushing through this like small drop, and like every time it's keep recurring like question about it. Thank you very much. Thank you.
Yeah, I think you know, it's you can frame it as these were our learnings. We learned a ton through this process where we spent all this money on acquiring these customers, and we hit pause on that whilst we could reconfigure, make the pivot, and now we're refocused on growing revenue in this better and more potentially profitable segment.
Thank you very much. Thank you so much.
Thank you, Sabrine. Anybody else have any other questions about the portion of how to tell that story? No? Okay, so I'll keep going because I think this is a good segue to, there is the pitch, the large, like let's talk about like the larger version, and then there's a 5-minute pitch. And so from your perspective, what are the key things that you should hit on a 5-minute pitch? Because not always are you going to have a full hour or even half hour. And so what's your thoughts on that?
It's a little bit of repetition to some of the stuff we've covered, though. But you know, really effective problem slide. What's the problem? You've identified it. Why? What is the problem that you've identified? How have you identified it? How are you going to solve it? And why are you the right team or person to be solving it? And so within that, that might allow you to speak to your experience in previous career, or previous startup, or maybe you just found it in a new aspect of your life. So you've got your problem, you've got your solution, you add in a little bit of who you are. I think, how are you going to stand out from the marketplace that existed already, assuming that your problem isn't a completely new problem that nobody's ever looked at before, which is usually unusual, I would say. How are you need to highlight what sets your business apart in a crowded market by focusing on, what is your specific audience or niche within that that's going to give you the foothold to then grow beyond it. I think you need to talk about how are you going to acquire your customers. What are your marketing channels or any early experiments you have done or you will be doing to show that there's traction. And I also think it's important to demonstrate, how you're going to be focused in those early, months or years. I think it can be tempting to talk about, well, we're going to sell to these, and then we're going to sell to this channel, then sell for this channel, and then grow beyond that. And all that's great in terms of like future vision and ambition. But, the most important thing, particularly if it's early stage, is how are you going to get those first customers and, get them to keep coming back or to be advocating on your behalf so you can grow your concentric circles out from your core audience. And being able to demonstrate that you can be focused and disciplined, but also nimble, I think is super important.
Right. We actually have 2 questions, and I'll just say something that I've heard you suggest, which I love, is record yourself and time yourself. I love that one because it's actually a really great exercise to do in the long run. Yeah,
completely. You, as you say, you've heard me tell people that a bunch of times. The other thing I would suggest is if you're pitching on Zoom, and I know this sounds so obvious, but you'll be amazed how many people don't think it's okay to do or don't do it, is, use Post-it notes and put it around there so you make sure you touch on your, the important points of your business, or if there's particular reminders that you feel like are useful to you in giving you that impetus to say certain things. Use the digital, the non-digital area around your digital camera to do that. I know it's such an obvious tip, but I know so many people don't think to do that. And I just think it's really powerful.
Yeah, no, I agree. Elodie, I know you have a question.
Yes, I do. Hi, everyone. So my startup is a sustainable beauty company. We are pre-revenue and pre-launch still. And when I pitch, I always get the question, what's your traction? And traction can be either revenue or maybe like a community of followers, etc. But as a pre-launch company, it's really hard for me to answer this question. And you mentioned that you're getting a lot of ideas on paper, so I would love to get your perspective on how to answer this traction question.
Well, I think that the first response to that question would always be, well, we are pre-launch. As yet, we haven't sold anything. I think if you have if you've given away any free samples or done any sort of small sampling events, if you've actually got product in hand, talking about the kind of feedback you've had there, or if you haven't done that stuff, maybe set some of that stuff up so it gives you material, or that we were partnered with a local fashion store, and we did an evening there and had all their customers come in and drink champagne and try the products, and we got these aspects of feedback, and this bit was great, and so we're focusing here, and we found out that one of the products didn't do this particular thing, so now we've gone back to the drawing board to iterate. You're looking for every and any way that you can demonstrate that you're actually talking to customers or potential customers and trying to understand that what you're doing is fitting their need. And it can be, if you don't have the product, just thinking about your specific company, maybe you've sent out a survey to 1,000 people, asking them around beauty and around sustainability and around the products they use and what they feel that the products they use lack, and then how that maps across to what you're working on. It's really what I think you can, if somebody is really belligerent on that point, but they already know that you're pre-launch and pre-revenue, I don't think they're being reasonable. But how can you avoid getting into that discussion is being able to demonstrate with just early potential customer outreach or early market research. That becomes the answer to the action question in my mind.
Thank you. That's very helpful.
Of course.
Thank you so much. There is another question, and I think, I don't know, I'll read it, but what are the resources you suggest to find early stage investors sorted by interest area and investment areas? I have a thought on this, but what's your thought on this?
I mean, again, Alex, you've heard me tell you this a million times. You have to get out there. And I know a lot of that getting out there now can be digital too, but you have to go to pitch events and networking events and local meetups. And, there's, whether it's Eventbrite or it's finding blogs from VCs and angel investors, because they're out there on Twitter, they're out, they're out there on Medium. You just have to, Alex has heard me say this a million times, it's a collisions game. You've got to be out there bumping into people either physically or virtually, exchanging contact details, talking about what you're doing, and then, following up with them, or if you get into a conversation and they say, well, I don't look at sustainable beauty companies, but I have a friend that does, and you should chat to them. I think the community, I mean, certainly, my experiences here in New York and spent some time on the West Coast too, is that it's an incredibly furtive and supportive community. You just have to be willing to sort of be open and engage and talk about what you're up to, and people want to help and people want to connect. And as a founder, it comes back to what we talked a little bit about earlier, is that you have to be selling. You're always selling, whether you're selling product, whether you're selling your company to try and hire somebody, or whether you're trying to sell your idea to an investor, you're always selling. And so the more you can get out there and be talking about what you're doing at networking events, pitch events, etc., the more you're sort of refining and iterating on your own skill set and your own pitch and your confidence in doing so.
Yeah, I agree with you. I actually tell a lot of my founders that I work with as a fractional CFO, I always tell them, make sure you have a budget for fundraising. You need a budget, because that means that you're going to have to travel to New York, to LA, to Chicago, whatever is the hot spots, and find out what events are. That has to be accounted for, because especially angels, they're harder to find. You can always find VCs, but angels are really going to be a lot of networking. I highly suggest subscribing to newsletters. There's quite a few right now, and I'm happy to share, that are really good about posting events. And yeah, I always send my founders to about 9 to 7 events a week, if they can hit that many, because it's just about who's going to introduce you to who. And I think this takes me to that segue that I was going to talk to you about.
Before you move on, sorry to interrupt, you just give me a second thought around that, which is, as well as thinking about the more formal meetups and the events, it tied into pitching your friends, your families, your ex-colleagues, your relatives, that kind of stuff. The more you talk about what you're doing with your business, in all situations, it's even within your friend circles and your sort of your friend networks, the more you say what you're doing to people, the more likely it is somebody's going to go, oh, I know somebody that invests in those kind of businesses, or I know somebody, and then they're going to make that connection. And you'd be surprised. I think more often than not, you have more people than you realize in your network that might be able to connect you to somebody that could be useful to you. But if you don't talk about it, and if you don't ask, or at least say, I've started this early stage sustainable beauty company, and we're raising money for the first time. If you don't even say that to your friends, your ex business school, university colleagues, whatever, like they're never going to know, and they're not going to know to be able to make you the introduction. And so it comes back to that sort of just continually talking, practicing, refining, your one line about what your business is, your 5 lines about what your business is, your 5-minute pitch. It's just practice.
Yeah, no, I completely agree. And I guess with that said, if you're pre-revenue, how do you sell that? And I know, based on the question we just had, we sort of touched on that, but there is a difference between a pre-revenue business and a business that already has some kind of beta. And I think you and I have also been encountering those. So what's your thought on what should they really focus on talking about aside from the problem? And aside from identifying the problem.
Yeah, it's a good question. What I would say is that probably 2 of my best investments ever have been in pre-revenue companies. And as I think about what those founders had in common and why I was so convicted to invest when I did, they were able to demonstrate a deep understanding of the market they were trying to attack. And they were able to convey a message of almost insane belief in how they were going to do it and how it was going to be successful. So that's not a direct answer to what you said there, but I think that has to sit above it. You have to really understand the market you're going after, and you have to really believe that you can do it, and you have to be able to communicate that, and you have to give that energy off. And both of those founders did that. More specifically, I think even without revenue, and I think it was Sabine, the person with the question a moment ago, finding ways to demonstrate that even though you haven't sold anything yet, that you have spoken to potential customer segments about what you're doing, and you're validating either the problem or the need for the solution, or the fact that what you're working on meets some aspects of that solution, and or that you've found information from those customer segments that you're then taking back on board and iterating on what you're already doing. And so it's sort of demonstrating that you're not doing the work that you're doing inside of a vacuum, I think is how you bridge that gap. It's like, even though we haven't sold anything, we're still talking to the people we think this was going to be useful to, and getting feedback on how we're thinking about things, so that we know that when we go there, there's some warm conversations to be having already.
Thank you. And just because we're almost about run out of time, I would like to just get your thoughts on, with the current environment, what do you think is essential for a founder about to go fundraise? And one of the things that I wanted to touch on is, especially there was a practice, and there's still that practice of letting founders know, investors know, hey, I'm starting to fundraise tomorrow, but I'm going to close the round end of July, sort of to create this fear of missing out to investors. And I'm just wondering your thoughts on that and the current environment. How should founders prepare themselves for what I think it's a marathon? It's not a sprint like it was in 21 or 2020. It's definitely going to be a marathon. So how do you prepare and also avoid some of those practices that worked?
To the point around creating the FOMO and having I'm going to end my round by that, something like that, that's a huge red flag to me. That somebody that's just, I'm starting now and I'm closing it in 2 months, that to me signals a complete understanding of how the process actually works. Because in almost all cases, as a founder trying to raise money, you're, rightly or wrongly, or whether it's good or bad, you're at the will of the investors, right? You're trying to raise the money, you need to get the money, and you've got to be able to sell your story to get that money. And you can't decide when that story is going to get people across the line. And I think there are differences between, or put differently, there are stages of the funnel in terms of finding investors. You find out who they are, you get connected. Maybe they respond to you on email, then you pitch them once, maybe you have to pitch them again, maybe they want more information, maybe a financial date. Then you get to this point, which I think some founders, particularly if they're first-time founders raising money, don't truly appreciate, which is you don't then go to like, yes, I want to invest, and that person's a done deal. You still lose some people in that last stage, which is, people who say they're going to invest and then they don't invest, or they say they're going to invest $100,000 and they only invest 25. And I've seen it time and time again. Founders take for granted that somebody says, yeah, I'm in for 50, and then you can't get hold of them again. You never hear from that person again. And you haven't got that investment until that money's in the bank. And so you have to, we have so often, really common phrase, you've heard this, I've soft circled 300. Soft circle 300 means that people have said, yeah, I'm in for a cumulative 300, right? But until those people wire that money, you don't know that they're in there. And so to then bring it back to the question a little bit is that, as a founder, yeah, it would be great to start tomorrow and end in 6 weeks, but it all depends on how you do. Maybe you will start tomorrow and be end in 3 weeks, but that depends on you finding the check writers who are going to fill out your round. And so trying to create FOMO by putting an end date on it, I think is a really naive step, and I would not recommend it, because for me, it would just put me off. It would suggest to me the founder doesn't understand it. In terms of this environment, it's very difficult. There are a lot less checks being written. Investors are in a lot of ways licking their wounds, and I think whether it's angels like myself or VCs, like, you spend a lot more of your time right now helping out existing companies and trying to figure out what their pathway looks like, and introducing them to investors if they need to raise more money, or raise additional money to what they originally thought, because the world hasn't turned out how they thought. And so you by extension, you have less bandwidth and less available potential capital for new stuff. So it's definitely difficult. That being said, there's a lot of commentary right now around how all the growth stage funds are moving into early stage because that's where they see the value. And certainly the historic data suggests that over the next 2 years, this is the best time to be investing in early stage stuff, because we're in the down part of the market. So there's encouragement to take from that. I think to then drill it down into what are the tactics or approaches that I think founders really need to be zeroed in on, it is understand. It goes back to the core tenets of the pitch and the core tenets of the business. You understand your problem. You understand how you're going to address it. You understand how much money you need to get to the next milestones. And we haven't touched on that up until now, but one of the questions I always am asking is, are they raising enough capital? Like, how did they decide to raise that amount of capital? They come to me, I'm raising $1 million. I'm like, okay, well, why $1 million? You don't ever want to say, oh, because we want to give away 20% of, this valuation. The market dictates the valuation to you. And I've always felt that way. You want to have picked that sum of money because it gets you to a point in the future that will then put you in a place to potentially raise more capital. And then you need to be able to understand, well, why is that sum of money going to get me to that point? And what is that point? And how have you decided what that point is? Is it a certain number of customers? Is it a certain revenue level? And in understanding these things and communicating that to investors, you're demonstrating you've done your work and you're understanding what your market might look like. And then it leads into my other question, which I mentioned earlier, which is like, okay, if you don't hit those benchmarks by that point, how much money will you have left? And what does that mean for your business? And again, then you're thinking about what the potential pitfalls can be and how you're going to navigate that problem. Because what I almost always find is it costs more and takes longer than founders think. And yes, there are plenty of examples where it doesn't play out that way for companies, but for most of them it does, in my experience. And that doesn't mean the companies don't end up being good, but it's how they navigate the fact and how they plan for the fact that they thought it was going to take them 9 months and cost them $500,000, and instead it takes them 18 months and costs them $1 million. And that's the difference between surviving and not surviving.
No, I think great point. That's why I enjoy so much our conversations and working with you. So any questions? I want to make sure anybody who has questions gets answers for them, since we are wrapping it up. No? Well, Thank you, Morgan, for taking the time.
Of course.
Oh, we have one more. Oh, no, we have a clap. Thank you so much for taking the time, and I really appreciate it and really enjoy this conversation. And we hope to see you again here. And Natalie, I don't know if you have a few last words.
Yeah,
Thank you for
quickly.
hosting us.
Yeah, no, I'd love to say hi quickly. If you haven't met me, I'm Natalie, the founder of She's Independent Investments. Love working with Alex. She's incredible and obviously knows some great people out in the industry. Founder Hour, which is what this is really aimed at, just having conversations, sharing some skills, insights into that founder community. And we invest. So, we're happy to look at deals, but we can't invest in everything. And so we're just really excited to add value, plug in. I'm not sure if Alex already mentioned, I don't think so, but we have a placements business. And so we have really great talent within our network. Alex can work with you to plug in board directors, fractional executives. So we'd love to hear from you if there's any interest in that. If you opt into our emails, you'll get updates on, future founder hours and what that looks like from the placement opportunity. And Alex is going to be in Boulder, Colorado, where I live, in July for an offline in-person hybrid event. So really excited about that.
Yeah, super excited. And thank you so much to everybody. And have a wonderful week. And see you next month on our next topic.
Thanks so
Bye.
much.
Take
Thanks,
care.
Morgan.
Bye.